Hello, everybody. Buffy the Rate Slayer here, and we are back with the first episode of the April 2022 Weekly Market Insight Series, directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Global equities perplexed as the vociferous month ended, moving forward with a bit more cautious stance. The rally in global equities remained fragile as the war in Ukraine dragged on and induced more volatility in the commodity markets. Investors are also unnerved by the prospect of a sharper withdrawal of stimulus by the central banks. Markets now see a strong chance that the Federal Reserve will lift rates by a half point at its May meeting. Russia had announced that it would pull back forces from and around Ukrainian capital Kyiv and suggested positive developments in peace talks, but as usual, was contradictory in the actions as attacks continued in the area, dousing hopes of a pathway to end the war. America and its NATO allies earlier expressed deep skepticism about Russian motivations for the de-escalation. So, what else is driving the market? Well, oil futures dropped after reports that the U.S. administration is considering a massive release from its strategic oil reserves. However, OPEC and its allies stuck to their planned output and approved a modest increase in supply at yesterday's meeting, which seems insufficient to fill in the supply gap left by Russia. America needs to continue to fight COVID-19, President Biden reiterated at the White House, and called on Congress to authorize a new round of funding for COVID-19 treatments and vaccines, underscoring the warning that U.S. stockpiles are running dry. The FHFA House Price Index rose 1.6% month over month in January, faster than last month's 1.3%. Mortgage applications fell 6.8% for the week ending March 25th, as mortgage rates continue to shoot up. Interestingly enough, refinance applications fell another 14.9% and purchase applications rose 0.6% during the week. The Conference Board's Consumer Confidence Index, which has the potential to pressure future spending plans of customers, improved a little to 107.2 in March after a historic lower February's reading of 105.7. President Biden released his budgetary desires for the upcoming fiscal year in a $5.8 trillion plan that boosts defense spending and aims to cut the deficit by raising taxes on high-income individuals and corporations. Initial jobless claims rose 14,000 in the week ending March 26 to 202,000, surprisingly marking the fifth lowest reading in more than 50 years and depicting the continued tight labor market. In one of the biggest crypto attacks to date, hackers stole about $600 million from a blockchain network connected to the popular Axie Infinity online game. The Federal Reserve's favorite inflation calculator rose 0.6% in February, while the increase over the past year stayed at a 40-year high. The Personal Consumption Price Index climbed to 6.4% in the 12 months that ended in February. So let's wrap it up. The Treasury curve flashed a concrete warning signal this week. The difference between 2 and 10-year yields turned negative for a moment. From the historic perspective, recessions have followed 8 out of the last 9 times it has happened since 1959. Although this doesn't guarantee there will be a recession in the upcoming months, but the correlation is undeniable. We'll just have to see where it takes us this time. So that's all we have for the current week, everyone. Join us again and get more market updates and the figures of trade and factory balance, consumer credit, mortgage applications index, jobless claims, and much more. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Happy Friday, everyone, and have a great weekend. Buffy out.